Hello everyone, welcome to a new video here on the channel. I wanted to make a special video today going over and use for an indicator, a special type of way that I use it. As you know, I'm mostly a price action and volume profile trader. I use very little indicators. Pretty much the only indicators I will use is I just have two long-term moving averages on my daily chart. I have the volume profiles, obviously I use a lot, and I have the VWAP line, but there is one instance where I use MACD in my trading, and this is what I'm gonna share with you today. This is one of the many strategies and things that I talk about in my trading courses. So I'm just gonna briefly go over this here. I'm not gonna go into all the details as far as like trade entries and trade management and how to where to like get out, etc. Basically, this is just one factor that I use for confluence within my entire strategy, but I think this will help a lot of you guys. And I think there's so much bad and misleading material when it comes to like indicator trading out there that I just want to show you one very good reliable use of the MACD indicator. So first, let me just go into a new blank screen. So this strategy that I'm gonna teach you, this signal, is made up of two parts. The first part is the triple drive pattern. If you followed any of my videos and market analysis, I talk about this pattern a lot. It's a popular pattern, reversal. And basically it's when we have a market, in this case, let's say we're just trending up, a lot of times you're gonna find that towards the end of a trend or move, a market is gonna make three impulses, in this case three upwards impulses, which we would call the triple drive, triple thrust, three pushes. There's many names for it, but basically this is a pretty good reversal signal that is letting us know that the market is getting exhausted and there is the possibility of a reversal or at least a pullback after we see a clear third push in one direction. Same thing in downtrends. We can see, and sometimes there's more, sometimes you're gonna get four pushes, it depends, but three, it's a very reliable and common number to see, so that is going to be our focus. So what this whole signal is going to be about is combining the triple impulse pattern, and then we're going to have the MACD indicator, and in the MACD indicator we are going to want to see a divergence with this. And by divergence will mean that, let's say, price is making a triple drive to the upside, but then our MACD, and we're going to go over this soon, our MACD lines are going to be making a descending divergence. So this is what we would call regular bearish divergence. Price is making a new high, MACD making a new low. This is bearish divergence. And if price is making a new lows and the MACD indicator in this case is making new highs, then this is what we would call a regular bullish divergence. Okay, but first let's just go back a little bit and just talk about the basics of what the MACD indicator is. So it's a MACD moving average convergence divergence. Is a momentum indicator that helps identify trends. It's made up of three elements to calculate it: a fast exponential moving average, which by standard it's 12 bars, a slow EMA, which is 26 bar standard, and then a moving average of the difference of them, which is with 9. So if we just go here, this is trading view, but any platform is going to have MACD. So if we put MACD, this is pretty much the default of how it comes in. So you can see there's three things here, and I'm going to open the settings as well, just so we can have it. Well, I'll just put it here so it's not like in the way. So you can see we have the MACD line, which is in blue. So it's going to be this line. This is considered the fast moving average, because the fast line, I mean, because you can see how this line changes directions quicker than the orange one. The orange one is the signal line. Obviously, you can change this colors to whatever you want. The signal line, which in this case is the orange, is the slower line, and you can see it takes a little bit more time for the orange line to turn directions before the blue line. And finally, we have a histogram, which you can see right here. This histogram, all it's measuring is the difference between the lines. So you can see when the lines cross, the histogram is basically at 0. And then when the lines start getting more apart, the histogram starts getting larger and larger. And now you'll notice in the histogram, sometimes it's red, sometimes it's green. Traditionally, and this is, one of the concepts that every just run-of-the-mill popular MACD guide is going to say is, when you have the fast MACD line crossing over the slow line, this is a signal to just buy. So then you just buy here, and then price should go up. And then when they cross again, you just close, or then here you go short, etc. Obviously, that is not reliable at all. Okay, and well, let me get rid of the histogram, because I actually don't like to use the histogram. I just use the lines for the purpose of this technique that I'm going to show you here. But yeah, I mean, if we go back on this, if trading was just as easy as just looking at a MACD and just, taking trades when things cross over, everyone would be a millionaire, and there will be like, trading would be easy, which is completely opposite to what, the reality is. That trading is like pretty hard. And so, sometimes the signal does work. Like, for example, here you can say, okay, yeah, this told us to go short, and yeah, the market went like short here, and then this was sort of the signal to like close. So yeah, you made a little profit here. But there's so many examples of like, false, like for example, like here, this gave you a signal. Let me just use a line so it's more precise. Like here, or no, sorry, here, like this give you a sign to buy here, and you can see, market went up just a little bit, and then immediately it just went down, etc. Here you got a signal to go long, and then market just immediately like went down here, etc. Here you got another signal, go long, and then this came down over here, etc. Okay, so anyway, the purpose of this video is not to talk about MACD cross signals. I don't use that at all, but just suffice to say, MACD is a lagging indicator. You're looking at past data, and those crossover signals for me are not reliable. And any trading guru or video that is just trying to sell you or tell you that a MACD crossover strategy or whatever is the best thing ever, it's, for me, is just basically just nonsense. So what does this strategy consist of? What we're going to do is we're going to look for divergences. And so like I said, here we have a nice example on British pound dollar on the daily chart. We have price making 3 drives lower, and then we have MACD making higher lows in this case. So this is what we would call a regular bullish divergence. And well, market is closed right now, but you can see we did get a nice pop here at the end of Friday and on this signal we have here. And normally what you would do with this then is, once you have your signal, then you would, you know, hone in, use whatever strategies you use for trading, any price action patterns, volume profile, market structure, Fibonacci, whatever tools you use to look. In this case, you would then focus on looking for bullish scenarios, bullish signals around this area once you confirm this divergence and market starts reversing. And then normally you would put your stop loss just below the third impulse, in this case the third impulse extreme. Okay, and one last important detail before we go in to see examples is you have to measure from the same side. So if you're measuring this and you put this line here, but then you're measuring the divergence over here, you know, this is not correct. I mean, in this case it does fit, but you want to measure from the same side. So if you're measuring bottom reversals, you want to put your line for your triple drives at the bottom and put your line for the MACD on the bottom as well. And then on tops, if you had a top here, you put the line on top of the chart and you put the line on top of the MACD. So just be consistent in that, bottom and bottom, top and top. Okay, so now let's just go to see different markets, charts, different time frames, and just go over several examples. And again, you know, I'm not telling you this technique is completely perfect. There's sometimes you will get a fourth drive or more, etc. But this is the best use of MACD that I have ever found with my trading. So here we have Bitcoin dollar 1 hour chart. So you can see in this case, sometimes you're gonna get something like this. You know, this is sort of like messy. This is not a very as clear, but you know, I would consider this one drive. Basically, you want to see just the market push, go back, push again, go back, push. So in this case, you can see here, we do have, you know, 3 wicks here, but this is considered like one. This would be the next, and then this is the last one, each making a lower low. And then you can see the MACD is giving us a bullish reversal signal. And you know, again, just because you get this doesn't mean you're gonna get a trend that is gonna go up for like weeks, you know. Sometimes these signals are just maybe like a short intraday trade signal, like a scalp, etc. The higher the time frame, obviously the stronger the, you know, the potential reversal is going to be. Just like in swing trading, if you take a, you know, a swing trade based on the daily time frame, obviously it's going to give you a better yield than if you just take a trade on like a 15-minute chart or a 5-minute chart. Here you have some nice examples of market tops. You have a very clear triple drive here. This is very nice. You want to see just quick impulse reversal, quick. So in this case you have 3 impulses, and then you can see the MACD was you know, diverging down. This market was not done yet. We did have then another reversal, and then in this case you have 1, 2, 3 impulses again, and again the MACD gave us another exhaustion signal, a bearish reversal, and then market went down. And in this case, obviously, you know, like I said, this is one factor of confluence that I use. And I don't even keep my MACD on at all times. I just, I use my volume profile like always, that I always talk on my videos. I look at market structure, etc. But then if I see a triple drive, if I see a 3 shove, 3 impulse pattern, then I'm putting my MACD just to see if I can confirm a divergence with it. So you don't even have to have the MACD on at all times on your screen. You can just bring it up when you identify a triple impulse, just to see if the momentum is waning in that market. Let's see other examples. In this case, you can see here we actually had, this one's where you have a market that is sort of just like chugging down. These are a little harder to see because, it's not as clear as just having 3 very clear shoves with big wicks. When you have a market that's just sort of drifting downward, this is more like it's making like a channel. But you can see here how you're coming on this whole channel down, and then once you get up to this point here, now you're starting to get a divergence, and now you have 1, 2, 3 impulses after the first after this first divergence. You have another shove here, and then you have a nice reversal. And maybe you say, oh, I thought this was 1, 2, 3, I put my stop here, I got stopped out. Obviously that can happen. But then you just look at this and say, okay, well, here market came up, we broke market structure up, so now I'm just gonna look for some kind of pattern or a retracement, and then try to get long. I know where I'm gonna put my protection, etc. Obviously you don't want to chase the market. If we're already like right here and you spot this divergence, you're not going to just market buy up here, because the momentum change has sort of already happened. Right here again, though, this is another one of those signals that I said, you sort of get a lot of just shoves. These ones are not very clear. Maybe you saw this 1, 2, 3, and so maybe you try to go short here. This was still diverging down, so you might have gotten stopped out. That happens as always. But you can see how here we kept making more shoves, and MACD kept us telling, this is losing steam. And then eventually we did have the breakdown. This was a very nice, clear triple drive divergence here. Market went down, now we start trending up, and now we have impulses here with the bearish divergence. Here's a signal. This is a traditional MACD divergence. If you look at a MACD theory, you're gonna see that aside from the signal lines crossing, there's also regular using MACD for divergences like we have here. This was, a good reversal signal temporarily, because market is really coming down hard. So in reality, this is just signaling like a quick pause or a little retracement. But in this case, for this strategy, for me, I would not take this because we only have 2 drives. I want to see 3 drives in a row because, like I said, the triple impulse pattern is a very reliable reversal pattern. So even though we had a MACD divergence here, I want to take only the ones that have a clear triple impulse on them. Okay, I think that's all for Bitcoin. Let's go into futures. This is the E-mini SP500 1-hour chart. And so here you can see, just several examples. And again, I recommend, if you want to learn more about this strategy, just go on to whatever market and time frame you use and just start, back testing going back on your charts and checking it out, here you can see this was like 4 impulses basically, but you did get the whole signal here. So depending how tight your stop was, you might have been taken out on this last impulse here. So you do run the risk of getting 4 drives. This case here, there's actually, I will draw it here. In this case, you have this, this again is one of those where it's a little harder to identify because you're just having a market that's drifting and drifting lower, but you can see that you do get, clear impulses. And in this case, you can see MACD did not give us any signal. That's why I had it in gray. Sorry, I forgot. I had this in gray marked basically to show you that, this is not a signal of anything. Market is pushing down and MACD is also pushing down with it. So even though this looks like a very nice triple drive, we had no confirmation from MACD. Here we have a nice little reversal here. Again, this is something that could have been really good in like a short-term trading, because as you can see, it wasn't a very it took a little time for market to actually collapse, but we did get the signal here, 3 drives down. So if you would have had your stop here, you would have still been safe. Here you can see right there, we broke this market structure to the downside. So that was another confirmation, and you could have had, your volume profile, etc. Again, this is just a confluence to add into your arsenal. I think that's it for this. If we go to stocks, this is the GameStop GME daily chart, and you can see here, for example, a nice triple drive down. We have 1, 2, 3, and our MACD is giving us the bullish divergence signal over here. Over here too, I didn't mark this one, but you can even see here you have 1, 2, 3 shops here, and the MACD is pointing down. There's a slight bearish divergence here as well, so I didn't mark that one, but this was another good example of this, etc. And if we go Forex, dollar, Australian dollar, US dollar, to just see this also on low time frames, this is a 5-minute chart, so this is also something you can even use, for day trading, for quick day trades, etc. So right here, for example, we have a nice little divergence here. And again, this, you're not going to get this signal all the time, so you got to be patient. But when you identify a nice clear one, those are really, really good, reliable patterns. Obviously, you would practice good risk management with a clear invalidation level, which in this case would be beyond the 3rd drive. You have the bullish divergence here. And then for your targets, I'm not going to get into this in depth, but I talk about this in all my strategies in my courses and videos that I share on YouTube. But you look for logical targets. Like if you have this candle here and you get long like around here, you want a good risk reward. Obviously, you don't want to take a trade where you enter here, your stop is here, and then you take profit like here, because that's like, it doesn't make sense to risk this much for this profit. So you got to take good risk reward trades, etc. Here, like you can see, this was a clear supply, resistance into a gap fill. So this would have been a nice take profit, etc. So, that's just something at your discretion using your own trading techniques. The main point of the video is just to show you the strategy of the price action in relation to MACD divergence. Another one here, you don't have a huge divergence, but it's still very clear. Market is pushing up. MACD is giving a bearish divergence. And then, here, once we break this support level, clearly market structure has just gone over here. And then we had a very impulsive move there. Here's another bullish divergence. Market is trending down. Then we get right here 1, 2. We did go away significantly, but then we came back up for the third one with a very nice bullish divergence. And even though it took a little while for it to take off, if you get your entry with your stop again beyond the third impulse, then in this case you would have been safe. Here's another nice example of a triple drive up. 1, 2, 3, divergence. And then here we have a clear market structure break, or even here on a more micro scale. You can just, when you see the signal, I recommend you just go down to lower time frames. Here you could have gone down into the 1 minute chart and look for this little market break as further confirmation that there's a downside move coming, etc. Here I didn't mark this, but you can see, we actually, this case we only got 2 impulses, but we did have a divergence. So this would have not been a signal for me. If this would have come up here for a third one, this would have been very nice. But as you can see, we did not get the signal in that case. And then here again, I marked this is a valid divergence with the MACD, but again, it's only, 2 drives. I don't have the third drive, so I would not have taken a confirmation here on the reversal of this. And then here again, this is another one that is not as clear because it's sort of chopping a lot, but basically you can see this push here, another push here, and then the other one here with the MACD divergence to the upside. Okay, and that's pretty much it for the video. I hope this has been insightful and helpful for all of you. Again, just to touch up on all the main points, I don't rely on indicators much in my trading because I think most of them are lagging and not very reliable. However, some of them, like this application where you're combining a price action pattern with a signal from in this case, the MACD, I think things like that adapted into, your strategies can definitely give you a nice element to form effective trade ideas. And I recommend, like I said, back test, go on your charts and just practice this, try to identify it, and just see how this can be useful in your own trading. Okay, that's pretty much it. Thank you everyone for watching. Make sure to subscribe, hit thumbs up. We are at 2,000 followers already. Thank you everyone that's tuned in, and let's just keep the channel growing. Check out my website and follow me on Twitter as well, so you don't miss any announcements or news or charts or things that I share. And I will see you all in the next video. Take care.